Robert K., Taylor Precision Products is not publicly traded, but you can literally and figuratively help us measure the consumer right now in America. You're not a new company. Tell me a little bit about Taylor, and then we'll talk about the consumer.
Sure, Greg. I like to say Taylor's not exactly a startup. It was founded in 1851. And since that time has become the commanding market leader in scale and measurement. If you look at bathroom scales, we have a 60 share, so dominant number one share. If you look at the kitchen side of the business, which we Taylor branded and Salter branded, thermometers, timers, and scales, again, strong number one share. So when I bought the business 3 years ago, along with Center Partners and some other financial investors, we saw an opportunity to take this dominant niche player and make a much broader housewares company, a global housewares company. And over the last 3 years, we've done that. We're now the leader in the wine accessory and barware accessory through the well-known nationally advertised Rabbit brand and Houdini brand. We bought that business in 2013. In 2014, we acquired Chefin, which is the trendsetter and the leader and the innovator in kitchen tools and gadgets, both with the Chefin brand and the Vi brand. So if you look at the kitchen category and if you look at the bath category, we're by far the market leader in both the consumer, the branded products on a global basis, and we're looking to go into other adjacencies, and both organically and through acquisitions.
So you're all over people's homes. We've seen a very good housing market here in the U.S. So talk about what consumers are buying and how they're buying it.
There's been, I think that the industry is going through a very fast pace of change at this point in time. Something that we haven't really seen in a few decades, and I think more importantly, over the last few decades, change in the consumer products industry has been driven by the retailer. And now change is being more driven by the consumer, because an interesting series of studies have been done, most recently by Forrester Research, which shows that, as most people know, online commerce or e-commerce has grown tremendously. If you look at housewares, about 10 years ago, virtually nothing was transacted online. Whereas today, in housewares, depending upon the category, approximately 10%. But more telling is that purchase decisions about 10 years ago was all made offline, traditional marketing, traditional advertising channels. And today, over 50% of purchase decisions by consumers are making online. So the way people shop, the way people make their decisions, and of course, since 50% are being made online, the majority of those people are being purchasing their goods offline at traditional brick and mortar. So you need to reach the consumer differently than you have in the past.
And what are you seeing the effects of the Chinese devaluation? I'll assume that a lot of your products are made in China, a lot of your scales made over there. So are you going to see an uptick in sales because they're cheaper for you to buy?
Well, yeah, the RMB devalued the other week almost 5%, and that hasn't flown through right now, but that's going to have implications as China is rebalancing itself, because most consumer products are made in Asia. What you're seeing now is nothing, but what you will see is obviously you're buying your goods in dollar base, so your cost of goods are going down meaningfully. That should add good value to the consumer, and hopefully either some people may just take that in margin, but I think that'll flow through the consumer.
And what about Taylor's expansion? How are you growing? You mentioned you expanded to the wine category. So what's next for you guys?
So we've doubled the business in 3 years since we bought it. A lot of that was acquisition-related growth, but we have a best-in-class design center in Seattle where we do engineering, industrial design, graphic artists, and colors, materials, and finish. And we're investing in taking that expertise and going into new adjacencies. We're looking to get into storage as an opportunity. We're looking to get in hydration, which we're already actually a major player in. And that's a very fast-growing category. So we think that there's a lot of categories within housewares that are appropriate for us, where you can add value from an innovation perspective as opposed to a copycat perspective.
And what about the idea of Taylor going public? We're seeing a lot of dislocation in the market right now. So will this delay any plans by yourselves and Center Partners to go public? How is what's happening right now in the market affecting you?
Actually, while the public market has been highly valued and has had a good run, so has the private market. And valuations in the private space, Greg, have been way above, I think, norms. And therefore, you tend to, as you're looking to transact and provide liquidity to your stakeholders, the private market is a very attractive market now for a company that's a little over $200 million. As we continue to grow and we could offer more liquidity, the public market is attractive. And if there's disruption in the market and there's a different gap, the public market even becomes more attractive, let alone giving us currency for acquisitions in the future.
All right, well, thanks for coming on and telling us about Taylor.
Appreciate it, Greg. Nice to meet you.
Thank you for watching The Street.